Good morning. It's Realtor Ryan Solberg here at Max Life Realty, giving you your updated market report for December 1st of 2022. Here we go towards the end of the year. We've got a month left. Let's see where the market is today. So, as you know in the news, you've probably heard a lot, but I'm going to give you the data and tell you where it actually is. So, you remember back in December last year when rates were 3%. Now they're trickling up towards 6.5%, right? We hit a peak here of around 7, and they're coming down a little bit. It's good news that they're coming down, not good where we are for most people. Your current rates as of yesterday for a 30-year conforming were 6.541 on average. And then if you do a 15-year, it's 5.893%. And basically, we're looking at a mid FICO score there. So your FICO ranges on the scores, dictate where you are for your percentage. All right. Going and looking at the central Orlando markets, so St. Pete, Orlando, Jacksonville, Daytona, those markets, you can see the sales year over year here. So an average year, January will start slow, it'll ramp up, March, April, May, June, July, and then as the end of the year comes and the holidays come, you usually trickle down. Now, you can see the pink line here was 2020. So you can see historic sales by year. When COVID hit, obviously our sales went down, and then it dramatically increased. Now that's going to follow the interest rate quite a bit. So the interesting thing, right, is 2022, what you care about, not 2021. So let's move on to the updated graphics for the new markets. Now these charts here are from the Space Coast MLS, which mostly covers Brevard County, Florida. I'm looking just at residential sales, so I'm excluding commercial sales from this data. You can see the number of new listings here is dramatically increasing, right? As soon as those rates started to increase and hit, in April, May, June, right? They started to get up there, the 5-6%. You can see not many people were actually buying houses. The number of active listings just kept going up and up and up. Well, the sold listings stayed pretty stable throughout the year. It never increased. Listing prices, as you can see, slightly increased over the year. The absorption rate, which means if every active listing was going to be sold and no new active listings were going to come on the market, how long would it take for all the buyers to buy up all the inventory? So you can see it's creeping up here. We're back to almost normal levels. A normal market is usually 2 to 3 months of inventory. COVID, threw the market in a lot of chaos, and we're getting back to normal here. The sold to list ratio, so you can see the sale to original list ratio. When the markets were hot, we were even above 100%. That's when the bidding wars were happening and people were paying more than the house was listed for. Well, that all stopped in May, June, and July. You actually start to see where July was 100%. They were still paying full price. Now we're down to, much more reasonable values. I would say, the average I typically see is about 97% of the sale to original list price. And you can see we're coming down, towards 95 range. And I think it's only going to keep going down as people are still overpricing their homes on the market and having to lower the price because they're not anticipating the 30, 60 days that it's going to take them to sell their house and where the market's going to be. As you can see, your average days on market, I mean, it definitely skyrocketed here. Typically we were around 30 days for 2022. 2021 was even less. And, September was really the month where, boom, it skyrocketed here. You've got a couple factors. You've got the interest rate. You've got the holiday season. And, yeah, you're going to see days on market, I think, continue to go up until either interest rates come down or the seasonal changes, take effect. Price volume, you can see the active list volume is way up there. That just means how many active, how much homes we have on the market. And there's a lot of homes on the market, but we're still selling. The sold sales volume is still, right around 500, 400, 500 million. So that's still a healthy market. It's not like home sales have just stopped. It's just not as hot as it was. All right. So now moving on to some national data, right? Let's get out of the, Orlando and Space Coast market and just look at national numbers here. So as you know, 2020 and 2021 were kind of the COVID years. So this chart is good, so 2019 is kind of your baseline numbers. And this one shows new listings in all Redfin metro areas. You can still see, when COVID came, the listings decreased dramatically and then they increased back up to normal levels or, even higher levels. But the homes were getting absorbed so quick by the buyers that the supply and demand made the supply more valuable. So now looking at 2022, you can see year over year, from last year where we were at, we're down 20% on new listings, but there's still a lot of listings in the market. So it just shows you that the market's not as hot as it was for sellers. Okay, moving on to the next chart here. New listings in just the Orlando, Florida metro area. You can see year over year we're down, right? So, and you can see that on the black line here for 2022. Last year there was quite a few new listings coming on the market, but they were getting bought up so quick that everyone thought, the market was hot for sellers. Now it's a buyer's market now. Moving on, your pending sales are what I really like looking at because it really gives you a snapshot of today, not 30 days ago when you're looking at sold sales, because those sales really happened 30 days ago in the marketplace, right? So looking at pending sales, you can see the black line here. As we start the year, we obviously expect it to increase, but it stopped increasing, Q2 of the year, which is odd. It normally is increasing until, well through Q2 into Q3. And then, looking at off market in 2 weeks as a percentage of pending sales, you can see once again in Q1 and Q2 it was somewhat normal, but right as Q3, the end of Q2 started, it plummeted, right? Because the interest rates just kept going up and up and up. And you'll see that in a couple of the next charts here. Looking at your new listings, median price in Orlando, Florida, you can see, 2019, 2020, 21, and 22. There's a big jump between 21 and 22 where the home prices dramatically increased, and that's due to inflation and sellers still thinking the market's hot and increasing their price. So looking at your average sale list ratio in Orlando, so average sale price to list ratio, you can see once again the market has shifted from above full price here is 100%, right? You're getting above full price in the summer, or the spring, and then as the summer comes, the interest rates are high and they even keep going up, and you even start to decrease, and there's not enough buyers in the market. There's so many listings that your average sale to list ratio is down by it's 97.5% or so in the Orlando, Florida area. And you can see the dramatic decrease year over year. So people are overpricing their houses basically since started like Q3 is kind of when you started to see a lot more price drops in the market. And I expect in 2023, I expect the trend to continue, right? You can see it kind of flatlining out. So, your average sale to list ratio, you're back to regular numbers. And that's it. That's all I have for today's market report. The takeaway from that is don't overprice your home and expect it to sell. And then you're going to end up having to do price drops. Price it right. Listen to your real estate agent or your advisor, and have a good year.